Nearly 90% of global foreign exchange transactions involve the US dollar. For decades, it's been the world's primary reserve currency and the backbone of international finance. The dollar's dominance, established at Bretton Woods after World War II, gave America an exorbitant privilege: the power to print money the world must accept, fueling US influence everywhere. This system created stability and enabled globalization, with nations worldwide holding vast dollar reserves. But what if that foundation is starting to crack? China, the world's second-largest economy, is now actively working to reduce its reliance on the dollar. This isn't just a financial shift, it's a profound geopolitical move that could reshape the global order for decades. Are we witnessing the twilight of the dollar's reign? The implications could touch everything from gas prices to global power balances. China's move away from the dollar is a calculated long-term strategy to reshape the global order in its favor. For years, China's trade surpluses led to massive dollar reserves, but this became a vulnerability. Beijing's fate was tied to US monetary policy. Watching the US use the dollar as a tool of sanctions, China saw the risk access to the dollar system could be revoked at any time. The solution? Build an alternative. China established currency swap agreements with dozens of countries, allowing direct trade in local currencies. It launched new financial institutions like the Asian Infrastructure Investment Bank, offering alternatives to US-dominated organizations. China encourages its partners, especially in the Belt and Road Initiative, to settle trade in yuan, building the infrastructure for a multipolar currency world. This isn't an overnight coup. It's a slow, methodical erosion of the dollar's foundations. The goal: make the dollar just one of several major currencies, not the only one. The decline of the dollar's dominance isn't just a concern for economists. It could impact everyone. The dollar's stability has anchored global trade and investment. If that anchor lifts, financial markets could become more volatile and unpredictable. For the US, losing reserve currency status means higher borrowing costs and tough choices on debt, spending, and taxes. America's ability to use financial sanctions as a diplomatic tool would weaken if countries can bypass the dollar system. For ordinary people, a weaker dollar could mean higher inflation and more expensive imports. Countries holding large dollar reserves could see their wealth erode. The global pricing of essentials like oil and food, long based on the dollar, could become chaotic if new standards emerge. The transition to a new system could be disruptive, with ripple effects across economies worldwide. The stability we've taken for granted may give way to a period of adjustment and uncertainty. The world is bracing for profound economic change. China's push to move beyond the dollar is about more than economics. It's about power, security, and technology. By internationalizing the yuan, China gains control over its monetary destiny and shields itself from US policy swings. Politically, promoting the yuan challenges the American-led global order and asserts China's status as a co-equal power. National security is a key driver. China wants to avoid being vulnerable to US financial sanctions, especially amid rising tensions. Technologically, China is pioneering digital payments and the digital yuan, aiming to leapfrog traditional banking and bypass the SWIFT system. A digital yuan could enable faster, cheaper cross-border transactions, sidestepping the dollar entirely. This technological edge could be a game-changer in China's quest to reshape global finance. The stakes are as much about influence and security as they are about money. For decades, oil has been priced in US dollars, creating constant global demand for the currency, the petrodollar system. But cracks are appearing. In 2022, China called for oil and gas trade with Arab nations to be settled in yuan. Saudi Arabia, the world's top oil exporter, is now openly discussing pricing some oil sales to China in yuan. A seismic shift. China is the world's largest oil importer, and for both sides, trading in yuan reduces risk and reflects new economic realities. For Gulf states, diversifying away from the dollar is a smart hedge as their economic future tilts toward Asia. This isn't just about currency, it's about a broader realignment of global interests, with China stepping in as a key economic partner. The potential acceptance of the yuan for oil sales signals a new era in global finance and geopolitics. China's digital yuan, or ECNY, could fundamentally change global finance. Unlike cryptocurrencies, the ECNY is state-backed and designed to replace cash, but its ambitions are global. The current international payment system, built on SWIFT and US banks, is slow and controlled by the West. The digital yuan could bypass this, enabling instant direct transactions between countries, no dollar needed. This would make US sanctions harder to enforce and offer countries an escape from dollar dependence. Challenges remain. Other nations must trust China's technology and governance, and the yuan isn't fully convertible. Still, China's first-mover advantage in digital currency could reshape the rules of global finance. The digital yuan is a powerful tool in the currency wars of the 21st century. The dollar's decline won't mean collapse, but a shift to a multipolar currency world. We could see distinct currency blocks, the dollar with its allies, the yuan with Belt and Road partners, and the euro as a third pole. Trade within these blocks would be smooth, but cross-block transactions could become more complex and politically charged. Global companies would need to manage multiple currencies and navigate new financial centers like Shanghai and Shenzhen. The simplicity of the dollar-centric world would give way to a more fragmented, competitive system. Institutions like the IMF and World Bank would need to adapt or risk losing relevance. Power would be dispersed among several capitals, making cooperation and competition more intense. We're at a turning point in global finance as China's rise challenges the dollar's long-held dominance. The shift to a multipolar currency world is underway, though the dollar's strengths, deep markets and trust, remain unmatched for now. China's economic growth and digital innovation are laying the groundwork for a viable alternative. The big question, will the dollar adapt and maintain its lead, or will its decline accelerate, bringing instability and competition? The answers depend on choices made in Washington, Beijing, and beyond. This isn't just about money. It's about the future of global power. The assumptions of the past 70 years may no longer hold. What do you think comes next for the dollar? Share your thoughts below.